Let's take a look at a couple of the banking stocks, Kenya, commercial banks and National Bank of Kenya. How are they faring today?
Yes. Okay, the stocks basically they shed some ground today with the National Bank recording the highest decline of around 2 shillings and 25 cents. Well, this looking at what is behind that decline, we are seeing that the market has factored in what has currently been happening in the economy, whereby I mean the economic environment is quite not very bad, but it's not doing quite well. So all these factors are going into factoring in into the price equation of those particular counters. So that's why we are seeing most of these counters are actually down, suppressed right now.
What more needs to be done for Kenya Commercial Bank and National Bank of Kenya to pick up?
Well, for the third quarter, we would expect some positive news. It really go well into improving the prospect for those particular counters. I mean, going by the last quarter, the results were that we could see the economy is not doing quite well in terms of people are not borrowing, banks are, in effect, banks are not lending, they are more on the fixed income instruments. So if KCB and the National Bank are to improve, some good information, some information that investors really rely upon should be forthcoming in the third quarter for those particular counters to go up.
While high inflation is likely to also top most banks' agenda in Kenya, how exactly will that affect the banking sector going forward? Well,
for inflation is a very key indicator of how the economy is performing. Because you find particularly, if you look at the consumer price index, you find that it has been increasing month on month. You're finding that the key factor there being the food prices, I mean, they're quite up. So, and energy is quite up, owing to the fact that right now we are basically, the government is mitigating against the shortfall in hydro by contracting what we call the independent power producers who rely on diesel. So all these factors are being actually factored in by banks going forward. So you find that they're going to price their products slightly higher, factoring in these inflation concerns going forward. So therefore, we do expect banks to really be keen on inflation going forward.
But do you think banking stocks hold its value that it did last year or 6 months ago?
Well, that would be a tough call, because looking at last year, we're operating at two different times, because last year the market was quite vibrant with Safaricom being listed last year, so there was a lot of market confidence at the time. Now this year, the financial crisis has really affected what is happening. So we're likely to see counters quite, I mean, the counters won't perform to last year's levels.
So which banking stocks hold the most value right now?
Well, going for the value stocks are Barclays as usual, as Stanchart, because going by what they reported in the last quarter, this is where investors are really focusing on. So we are likely to see investors go in heavily on these two particular counters. But we're also seeing renewed foreign activity in Kenyan Commercial Bank, so that is likely to see the counter gain some appeal from the local investors.
All right, let's take a look at the bourse for this week. What exactly is going to drive sentiments? Sorry, Henry, are you battling to hear us there?
Yes, I can't hear you properly.
Okay, can you give us just a sense of what will drive market sentiments for this week?
Oh, for this week? Well, for this week, going by today volumes, the turnover is quite low. So, well, we're likely to see some IT stocks picking up this week, because last week, but one we had Access releasing their figures. We saw the growth in the internet side of the business. So for the manufacturing side, you're likely to see EABL, East African breweries pick up, Bamburi. Basically, the sectors that are resilient to the current economic terms are the ones that are likely to drive the market for this week. Yeah, the construction sector, particularly infrastructure, and IT.